Okay, so in this lecture, we will discuss about personal income tax, so which is the topic 5. So in this personal income tax topic, first of all, we discuss about uh, tax residency, means who gonna pay personal income tax in Vietnam. So it has a criteria. If you meet that criteria, then you are liable to pay personal income tax if you have any kinds of uh, employments or non-employments income. Second thing, we discuss about the tax year. So what is basically the time period in which we are liable to pay tax? So this is normally 12 months, which follow the calendar year. Could be from January to December. Mainly, most of the time, January to December is a period known as a tax year, in which individuals liable to pay tax in relation of personal income. Then another thing we discuss about the taxable income. What is the meaning of taxable income? So taxable income is any kinds of income on which we have to pay tax, right? And of course, all kinds of employments income doesn't mean that taxable income. So we're going to discuss about any kinds of employments income which are tax-free, right, which is exempt. We also call it exempt income. So it's exempt from the from the making payments for personal income tax. Then we also discuss about some other kinds of non-employment income, and that's non-employment income. So this non-employment income classify into 2 different categories: taxable non-employment, taxable income, which is not part of the employments, which is not part of the any kinds of services you are providing under the contract. That's known as the employments, right? So employments income taxable, and employments income non-taxable, right? And then later on, after discussing all the kind of taxables and non-taxables income, then we move on to the deductions, right? Some kind of allowances and benefits that help you to reduce the tax liability or taxable income. That's known as deductions. So we have a certain list of deduction, around 5 to 7 items that belongs to the deductions. And then later on, we discuss about the different kinds of tax rates. And that tax rates, they have a particular threshold or the slab systems. If you comes in that particular income categories, so you're gonna pay certain amount of tax. So it's just like as the table. So threshold, which is the limits, and the tax rates. So it's like around, we have a 6 different kinds of tax rates for the 6 different income limits or income threshold, right? That's for personal income tax. And we also discuss about some kinds of non-employment income, right? That's income not part of the salary and all this kind of stuff, and they have a separate tax rates for those kinds of income. So these are mainly the tax rates we will discuss about. And further, in relation of tax rates, we will discuss about the people who are the people who do not meet the requirements for tax residence. Those people called or known as non-residents. So there is a separate kinds of tax rates for the people who comes under the categories of non-residents. So there are the certain list of the rates, right? And finally, we'll discuss about some administration system. In this administration system, we're going to focus on the 2 things. The first thing is the tax code. What is the meaning of tax codes? And second thing is the income declarations and income tax payments. So at the end of the year, we have to file a tax returns, and in order to check whether we can get some kind of tax refunds or not. And government gonna do the same thing at the end of the year. Government gonna compare your monthly tax to the tax the government have estimated. If the tax is the equal, then of course you don't have to pay additional tax. But if it's less than the government estimation, then you have to pay tax, or you already paid more tax. and the government, then you can appeal for the tax refunds. All right. So all these kind of things we will discuss in today's session, and then later at the end of session, I will give you quick summary with some short tables to understand the overall ideas for the personal income tax. All right. So let's start with the first learning outcome. So the first learning outcome is a residency, tax residency. Right. Keep in your mind, tax residency are different than permanent residency. All right. So it's a different. Right. If you meet the criteria for tax residency, you are liable to pay tax as per the tax rates implemented by the Vietnamese government. All right. No matter you are a permanent resident or you are not a permanent resident. All right. So, so tax residencies have two main criteria. So the first criteria is you stay in Vietnam more than 182 days. All right. If you stay in Vietnam more than 182 days, you will be treated as Vietnamese tax residents as per the tax departments or as per the tax law, right? No matter you are a Vietnamese or you are a foreigners. And second requirements is you are a permanent residence, right? This permanent residence only for locals. Only for locals, means Vietnamese, right? But if you are a foreigners, if you are a non-Vietnamese, like as me, then either you can have a temporary residence, all right, or you stay again more than 182 days, right? You stay more than 182 days, right? So
teacher, can you tell me PR what's mean?
Permanent residence.
Yes, thank you.
Right. So if you are a permanent resident, of course, it means a local. The local Vietnamese people or nationalities people, they're known as a permanent residents because according to Vietnam law, foreigners, they have a certain kinds of limitations to apply for permanent residence. So most of foreigners, they can only apply for TR. Of course, they have some certain kinds of rules and regulations for it. But anyway, if you're non-Vietnamese, TR, or you stay more than 182 days. So you will be treated as a tax resident in Vietnam. All right? Okay. So idea is, if you meet these requirements, you are subject to pay personal income tax, all right, as per Vietnam law, or whatever requirements or whatever the tax rates comes under the Vietnam tax law. You have to estimate your tax rate, tax liability following that tax rates, all right? But if you do not meet the criteria, if you not meet this criteria, whatever is the criteria for tax residency, if you don't meet that, what will be happen for you, all right? If you do not meet that criteria, whatever tax rates come under the Vietnamese tax law for residents, that tax rates will not apply, all right? So in this case, there is a flat rate, which is 20%. 20% flat rates will apply on your income, all right? No matter how much income you are generating, all right? But for the people who are tax residents, they're not gonna pay 20%. They're gonna pay 5, 10, 15, 20, 30, 35, depends what kind of income you have. But if you do not meet the criteria for tax residency, then you're gonna pay straight away 20% tax, all right? So this also implements to the most of the time for foreigners, all right? Most of the time it's implement to the foreigners. Like this very first time when I come to Vietnam, it was like 2012, right? And then I started generating some incomes in Vietnam. So I remember that time the tax rate was also 20% flat. So until now, there is not much changes in that. Of course, there is no any change in this flat rate, right? So which is straight away 20%, right? Okay. So that's the ideas behind uh, uh, tax residency, right? So this is the first or foremost information that we need to know to check whether Vietnamese tax law, different tax rates implements on us or not, all right? So that's all about your learning outcome 1. Now we move on to learning outcome 2. So learning outcome 2, which is a taxable and non-taxable income, right? Taxable and non-taxable income. You know that. Taxable income is any kinds of income on which we have to pay tax, right? That's called taxable income. And non-taxable income, any kinds of income, it's an income, but we don't have to pay any kinds of tax, all right? Another name of non-taxable income, also called, another name is exempt income, all right? We also call it exempt income. We also call it exempt income, right? Exempt income, also known as non-taxable income, right? It's exempt from the different tax rates, right? So this taxable and non-taxable incomes divided into 2 categories. It divided into 2 categories. One is employment. One is employment, and another one is a non-employment. All right? Employment and non-employments. Now here, what does it mean, employments and non-employments? The meaning of employment is you are receiving a regular income, which is, of course, comes through the salary. All right. So another way to understand the employment is, employments means work under contract, right? Let me explain. Work under contract. And non-employments could be a business or some other kinds. So another way to understand non-employment is a work for contract. All right, work for contract. That contract could be verbal or non-verbal. All right, so work for contract. All right. So if you work under contract, you will be treated as an employee. All right, employee. All right, and work for contract could be treated as a, I won't say employer, because there is some kinds of income which are part of non-employments, but generating that income, you necessarily don't have to be employer, right? For example, I keep some money in bank, I save some money in bank, right? And I receive interest time to time. That interest known as non-employment income, all right? So I am receiving interest, all right? So, and whatever is the contract I signed with the bank, and bank gonna give me that fixed amount of interest every month. So in this situation, I'm not an employer, all right? So I won't say that work for contract means always employer. In some case, you could be employer or you may not be employer, right? So that's why just keep it work for contract instead of just saying that it means employer. All right, so let's talk about employment. Now, this employment, so let me write down A and B. A is employment and B is non-employment. This non-employments divided into another two parts. Right? Divided into another two parts. One is a taxable income, right? And another one is a non-taxable income. Non-taxable income. Okay. And in employments, we will not discuss about taxable income, because if you're receiving a salary, that's known as your taxable incomes, right? So I'll write them here. So employees receive salary. All right, employees normally they receive a salary. So in this employments, I will discuss about non-taxable income. All right, any other income related to employment which does not comes under the category of non-employments, that income known as taxable income, right? So I will write down here non-taxable income which comes under employments. If you are an employee and you are receiving such kinds of income, you don't have to pay tax, right? So I'll write down here non-taxable income. Non-taxable income. Okay. So we have a list of some kinds of non-taxable employment income. So the first one is a payment for business trip. All right. If company give you any kinds of payments in cash, and that's payments for the business trip. Let's say you are travel to another city known as maybe uh, Hanoi city. All right. If you travel to that city and company pay you cash for it, so you're receiving the income, right? So you don't have to pay tax on it, right? Company pay you money, payments for telephones, telephone bills to making calls, and stationery, any kinds of stationery, pen, pencil, paper, and all these kind of things. If company make you payments for it, it's known as non-taxable income, right? Company pay you for office clothes. If company pay you for office clothes, you don't have to pay tax on it. If you work overtime, under the company's contract, means company required you to work overtime. So let's say, for example, your working time is 8:30 to, let's say, 5 p.m., 8:30 a.m. to 5 p.m. And company decided you to give you overtime. So if you're working extra 2 or 3 hours, and whatever income you generate from that overtimes, that's overtime income is a non-taxable income. You don't have to pay any tax. So if you're working, let's say, from 8:30 morning to 8:30 evening, so from 8:30 a.m. to 8:30 p.m., so you have to pay tax for the income that you generated until 5 p.m. So whatever income you are generating from employments after 5:30, after 5 p.m. to 8:30, you don't have to pay tax. That's the meaning of overtime. So in overtime, sometimes you have evening shifts, or sometimes you have a night shift, sometimes you have a weekend shift, or you have a public holiday shifts, and all this kind of things, which comes under the overtime. So overtime means more than your time or hours that's mentioned in your contract. So let's say normally when we start working with the companies, so company they mention in a contract that in 1 week, which is of course Monday to Friday, some companies Saturday. So Monday to Saturday, you're gonna work 40 hours, right? But if you found that you're working more than 40 hours, let's say in 1 week you work 45 hours, right? So you have to pay tax only for 40 hours. So 5 hours, you make an income, but you don't have to pay tax. It's a tax-free income, all right? Next one is a allowance for relocation, right? Allowance for relocation, and this allowance is normally one-off. So, for example, You are working with one company in Ho Chi Minh City, and the same company offer you job in Hanoi City, and you're planning to, and then of course you have to move to Hanoi. So of course when most of the time, or most of the companies, it depends, but most of the company, if they offering you another position in another city, then company also pay you all the kind of expenses that you have to bear to move there, to settle there. So whatever, so this is called allowance, the benefits that you are receiving from company to relocate one city to another city, or one country to another country. But normally company pay one off, right? Company do not pay go and come back. So let's say you wanna move to Hanoi, so you go to Hanoi, so company will pay you only one-sided fare, airfare, or any other kinds of fare. So company, they're not gonna pay you for two sides, go and come back, right? So that's the meaning of one-off. Same thing, if you're working with any kinds of, if you are a foreigner, let's say, and you're working in a Vietnam with international companies, and when you first time you're moving to Vietnam, company will pay you for one-sided airfare or one-sided expenses that you have bear to reach Vietnam or settle yourself in Vietnam. All right. So that's known as the allowances for relocation. So if you're getting any kinds of allowances that's related to this relocation, and so you will receive exempt benefits. Another one is transportations to and from work or office, right? So if you travel to the office, and of course every company don't pay for it, it depends, but if company is paying you any kinds of money to go and come back from to office, or come back from office, then company, we will pay you money for it. And in addition, if you're traveling, for example, from your one branch to another branch, so let's say you have one branch in district 1 and another branch in district 7. So if you travel to from district 1 to district 7 and you come back to the office, then company will pay you money for it. All right. And that's money you don't have to pay tax. Next one is a sometime company give you a free travel. All right. And company is kind of incentives, is kind of another kinds of benefits, or benefits in kind. Benefits in kind means any kinds of benefits that company do not pay you in terms of cash. All right. So if you're receiving any kinds of benefits in kinds, or any other kinds of foreign trip, so that's one foreign trip provided by company to you. It's non-taxable, right? So once per year, air fare, right? Next one is the um, school fees up to high school. Sometimes some companies in Vietnam, they also pay extra money to employee for the tuition fee of that kids education, right? And of course it has a limits, companies by company, that how much money company gonna pay to to employees for their kids to study, right? So if you are receiving any kinds of school fee benefits from your company, right? And and that benefits only applicable to the kids study for maximum high schools. If a company is paying money for you for university or after high school education, then it will not be treated as a exempt income. All right, so the condition is up to high school. Company pay money for kids education for up to 5 years, up to high school. So that's known as exempt income. Next one is training. You work under a trainee and company will pay you money for it, exempt income. Right? Any kinds of shift meals. If you're working in a company and company is giving you any kinds of meal benefits, of course, meal benefits that will be in cash. A company give you cash for the meals, that will not, you don't have to pay tax on it, right? So any kinds of airfare, you are working, all right? You are working and company pay you airfare. So especially for the petroleum or any kinds of petroleum related companies in Vietnam, they mostly when employees travel one place to another place, company give them airfare. If you're receiving that airfare in cash, you don't have to pay tax on it, right? If company will give you allowances for wedding and funeral, company give you any kinds of allowance for wedding and funerals, you don't have to pay tax. All right. So these are the list of items on which you don't have to pay tax. All right. So these are the exempt income. All right. So now the question is why companies why government allow such kinds of benefits on which you don't have to pay tax or any kind of tax benefits, because this without such expense. Okay, so I was saying that what are the reason to give such kinds of benefits or such kinds of income on which you don't have to pay tax related to employment? The reason is that such kinds of benefits, first thing, of course, they encourage employees to work. And second thing is with some of those expenses, not all, some of those expenses that company will pay for them, uh, they are required for them to work. All right. If company are not paying for that, they may not be able to work it. Right. So by that reason, government is saying that if company is paying you for all these kind of necessary expenses, could be traveling, could be offices, could be meals, and so on. If company is giving you any kinds of income relation in relation of those kinds of expenses, you don't have to pay tax. That's the reason those kinds of income known as exempt income related to employment income, right? So now we move on to the uh, second types of income, which is non-employment income. So of course, it is divided into two parts, as I said: taxable income related to non-employment, right? That's not part of employment, but you have to pay tax. And second one will be non-taxable income, right? So let's start with the taxable income. First thing is a business income. Business income. If you are involved in any kinds of business, then uh, whatever tax you will pay you will pay tax as per non-employment income. So remember, for employment income and non-employment income, we have different tax rates, right? For these kinds of non-employment income, we have different tax rates. That's we will study later on in this topic 5, all right? And for employment income, we have a different tax rate. So that's why we have to differentiate employment income from non-employment income, right? So first thing is a business income. Remember, if you are involved any kinds of rental activity, so means you are generating rent every time. So that's known as your business. Let's say you build some houses and you put that houses on rent, all right? So that kind of business, of course, known as that's kind of activity known as the business. And whatever rent you receive over the time, every month, every week, depends. So that's also known as business. But rental income is if you are generating income more than 100 million Vietnam dong per year, right? If you are generating 100 million income in 1 year, so that means business, so your income will be known as a non-employment income. Correct. Personal income tax will not apply on it, right? So keep in your mind the non-employment income tax is generally higher than the personal income tax. Depends how much income you are generating, right? So keep in your mind this thing. Second thing is uh, you receive any kinds of investment income. You invested money and you're receiving an income. So that income could be interest, all right? Because you deposit money in bank and you receive interest over the time. That's also known as your investment. Interest or dividend. All right? Interest or dividend. So that's kinds of income are taxable income. Next one is a gain on sale of shares. Gain on sale of share. You buy and sell shares. So you involve in such kind of security trading activity. You buy and sell. So let's say you buy one stock's $9 and you sell it at $11. So you got a $2 profit on one share. All right. So you have to pay tax on this $2. All right. And that $2 is known as your non-employment income. All right. So this $2 known as your non-employment income. All right. Next one is a gain on real estates, right? So you involve in buying and selling land and building, real estates, right? Property related buying and selling. If you involve in that kind of activity and you're making a gain, right? So you're making a profit. So you have to pay tax as per the tax rate implements for the non-employment income, right? But of course, it's a part of personal income tax. So remember, I don't know if you remember or not, in the first session, I explained you about capital gain tax, all right? Capital gain tax. And later on, I came to know that in Vietnam, normally people don't have, individuals, they don't have to pay capital gain tax. Why? Because these types of gain part of capital gain, right? But in Vietnam, you don't have to pay separate a capital gain tax. All right. So capital gain for you will be known as non-employment income, and you will pay personal income tax on non-employment income. Right. So in Vietnam, no, we don't have capital gain tax. Next one is a winning prize. Winning prize. You win any kinds of prize or anything, right? So let's say you went to some show where you make some money. Let's say, I don't know, show name is Who Wants to Become a Millionaire. All right. So you go to that show and you made some money. All right. Then whatever money you are making, that's money will be known as non-employment income. But of course, there is a condition for winning prize. The condition for winning prize is make sure your income is more than 10 million Vietnam dong. If your income under 10 million Vietnam dong, it will not be treated as a non-employment income, and then you don't have to pay tax on it. Right? So minimum 10 million or above. Right? Next one is a income from copyrights. I hope you know copyrights. So you have only right to use that brand name or that kind of thing. So let's say you use a brand name of any company, right? And you use that brand name to make money, right? So that income will be known as your uh, non-taxable, non-employment income, right? So it could be a copyrights and you receive, or you receive any kinds of gift in form of cash. Right? So like as normally in Vietnam, on weddings, you people normally give cash instead of giving some gifts, I mean cash gifts for bride and grooms. So that's income will be known as non-employment income. Right? And any other kinds of income from taking franchises. Franchises. Franchises means, let's say you open a mini store. Uh, that's kind of small supermarkets you open it. You're taking a license from mini stops to conduct a business. That's known as franchising. All right. So it could be mini stops, could be McDonald's, could be any other kinds of food courts or any other kinds of things that you involve in. You have a right to sell product and services using their name or under their logo. All right. So that's not called franchising, right? So remember, any kinds of income from copyrights, gift, and franchises. If that income is above 10 million, right? That income is above 10 million, then you you have to pay tax, and that will be known as your non-employment income. All right. So that's all about taxable income in relation to a non-employment. So let's move on to the non-taxable income. Non-taxable income. So under non-taxable income, first one is a interest on deposits. Interest on deposit. You deposited some money, but that money you deposit under the insurance schemes or any kind of things, this belongs to insurance. Insurance institutions, or we also call it you receive interest from deposit under institutions known as a credit institution. Credit institutions. So credit institutions are, I guess we also call it non-depository institutions. So like insurance are the examples of the non-depository institutions. So we call it credit institutions. So if you're receiving any kind of interest from credit institutions or non-depository institutions, right? So you don't have to. I mean, that's known as non-taxable income. So keep in your mind there is a difference between interest here and interest here. These interests come from depository institutions like as bank. Depository institution means any kind of institutions where you can deposit money and you can withdraw whenever you like it, right? But credit institution deposit is the deposits gonna be mature as per the conditions of that institution. If you meet those kind of conditions, then you receive some kinds of interest, right? Or after that particular period, you will receive some money. That's known as the non-depository. Right? So I guess it's a depository institution. Depository institution. Right? Interest from depository institution, interest from non-depository or credit. Right? I hope you studied this in your other finance class type of institutions. Depository. Right? Depository institution and non-depository. So if you interest from non-depository institutions, you don't have to pay tax. But if you interest from the depository institution, then you have to pay tax. Next is any kinds of compensation. Right? Any kinds of compensations. Compensation in relation of any insurance. Right? Insurance. So let's say you bought an insurance for motorbike, and your motorbike broke down, and insurance company will pay you money. So whatever money you receive, that's your non-employment income, but also non-taxable income, right? Next is a retirement pension. Under social and insurance law. As per social and insurance law, uh, during your employment time, uh, you contribute some kinds of money, but once you retire, you are no more in the employment, right? So you receive a pension that normally people receive after the retirement. So every month, monthly income, all right? So that's monthly income known as non-employment income, and of course, non-taxable income, right? After retirements, we're going to receive a pension. Okay. Income from transferring property or assets. So let's say transferring assets among family members. Family members. So let's say in one family, parents, they divided properties or they divided any kinds of income among all kids. So So they receive income, that's non-employment income, and of course, that's income also known as non-taxable income. Right? So receiving any kinds of income from the family members, right, or parents or someone else, and which is divided only for the family. Right? But if you are receiving that kind of income from outsiders, yes, that's non-employment, but it's a taxable income, right? Next is the gift within family member. All right? Family members. So the one family within the family, they are giving a gifts to each others. That gifts could be comes in form of cash or any other kinds of valuable things. That's treated as a non-taxable income. Next is income from winning casinos. If you go to casinos and you make some money, right? It's non-taxable, all right? So if you are winning any kinds of prize, all right? If you are winning any kinds of prize, that's known as taxable income. Prize or any kinds of lottery. So any kinds of prize and lottery. Right? Prize or lottery up to more than 10 million, then it will be taxable income. But if you involve in any kinds of casinos, that's non-taxable. So it could be winning prize, lottery, or betting. Of course, legal betting. Of course, make sure it's not illegal. So I guess betting is illegal in Vietnam, but I don't know. So, but if you involve in any kinds of legal betting, then will be involved paying tax, all right? But if it's income from casinos, make money, you don't have to pay taxes, right? So that's all about the income related to non-employments, taxable and non-taxable, right? So now we move on to the next. Next is number 3. So this is foreign tax credits. So it's foreign tax credit. For example, as per Vietnam law, you are a tax resident, right? But at the same time, if you generate personal income tax, I mean, you generate any kinds of personal income in foreign country and you already paid personal income tax in foreign country, right? And if you bring that income to Vietnam, right? So that's income will give you benefits to reduce your personal income tax liability, right? So idea is if any tax residence, of course, tax residence, I'm talking about Vietnam, according to Vietnam law, all right, any tax residence, that tax residence already paid personal income tax in foreign country, right? You already paid that personal income tax. So now you have a income here, net income, right? So net income, any kind of income after paying tax. So you paid this PIT in foreign country. And if you bring this income back to Vietnam, right? If you bring that income back to Vietnam, so this PIT, known as a creditable, right? Or foreign tax creditable. So this is a creditable. Creditable. So creditable means you will get benefits, or that amounts will help you to reduce your tax liability in Vietnam, because you also are tax residents. You're making some money in Vietnam. So let's say you're tax residents, you are making, your taxable income is $150, right? And you already paid 20 PIT in foreign country, so it will be subtracted from here, all right? So your taxable income remain 130. So this is known as creditable. That's the meaning of creditable, all right? But of course, the condition is that you bring that money in Vietnam, and then you're keeping all the kinds of records, evidence, tax evidence that you already made the payments in foreign country. So when you file a tax returns at the end of the year, then you can claim that this money, I bring it to Vietnam, and this is my employment's income, right? And I already paid personal income tax. Remember, I'm talking about employment's income in foreign country, right? Not no any kinds of no any kinds of business income, all right? Let me check. Wait. Yeah, that's mainly foreign income, right? So any kinds of foreign income, you bring it, and it comes under the categories of tax employments or non-employments, right? Net income. So any income in foreign country, any income in foreign country. So that income could be maybe employment's income, all right, or non-employment's income, any income, all right? So that's income known as foreign income, all right? So any kinds of foreign income on which you already paid personal income tax in foreign country, and you bring that money back to Vietnam. So whatever tax you have been paid in foreign country, the tax will help you to reduce the tax liability. Belongs to personal income tax, all right? Yeah. It will be, what do we call it? That's also known as, it can, I forgot the word that we can use it for that kind of situations. Okay, anyway, when it comes in my mind, that I will tell you. There is a one word for all this such kinds of replacements from one income as a one expenses will be treated as a benefits in other country. All right, so I forgot. I will let you know if it comes in my mind. So that's all about your number 3, foreign tax credits, right? Now move on to the number 4. If you have any question, you can stop me in the middle, or you wait for the Q&A session. So you make a notes of your question if you don't want to interrupt me now. But if you have a question, please feel free to interrupt me in the middle. I'm happy to stop and answer your questions, right? So now next, which is number 4, it's a tax deductions. Tax deductions. Now, what does it mean, tax deduction? So tax deduction means any kinds of payments that help you to reduce your tax liability, all right? You're making some kinds of contribution or some kinds of payments that help you to reduce your tax liability, all right? So, or that help you to reduce your taxable income, right? Tax liability or taxable income. So tax deductions. So tax deductions involved first thing is an employment contribution to insurance scheme. Employee contribution to insurance scheme. All right. You contributed to any kinds of insurance. So you're making a payments for any kinds of insurance. Of course, government encourage people to buy more insurance, because when those people, they're going to have a bad time, so they can get some money back from the insurance instead of taking money or benefits from the government, right? So government encourage people to buy insurance. So government says that, so how government can encourage? By giving them tax deduction. So government says that if you are making contribution for any kinds of insurance plans, could be health insurance, could be a general insurance, or any other kinds of insurance, if you involve in such kinds of insurance policies and you're making a payments, whatever payments you are making, that will be treated as your tax deduction that help you to reduce the tax liability, right? Next one is any kinds of contribution to the local voluntary schemes. You're making any kinds of contributions to pension scheme, pension scheme. Right? Any kinds of contributions to the local pension schemes, which is not at the state or not at the national levels. So it's depends upon the particular provinces or the local governments pension schemes. If you are involved in that kind of insurance pension, so whatever payments you are making that help you to reduce your tax liability, right? So, and second one is a third one is a contribution for some certain charities, right? But of course, there is a limits to make a charity, right? You can't just charity unlimited to reduce your taxable income, right? So, but another condition for this charities are that charities organizations must be approved. So you cannot charity to any other charity organizations you like it. You can't do that. Right? It must be approved under the government, so they have a specific license or any kinds of things. That's will be so whatever payments that you are making or donating, that will help you to reduce your tax liability. And some kinds of tax allowances. Right? Some kinds of allowance. Now here are some kinds of allowances. So that allowance involves two kinds of allowances. One is a personal allowance. Personal allowance. If you're receiving any kinds of personal allowance up to 9 million Vietnam dong per month. So personal allowance up to 9 million Vietnam dong per month. So that's treated as your tax allowance. Second one is a dependent allowance. Dependent allowance is, I guess, 3.6 million Vietnam dong. 3.6 million Vietnam dong per month and per dependent. Whoever is dependent in the family, so especially known as the kids. So if you are if you're receiving any kinds of tax allowances for the dependents, which is 3.6 million 1 month, and that 3.6 million one month for one dependent, depends how many number of dependents you have, right? And remember, that's dependent must be registered under the tax office, right? So that dependent must be registered under tax office. So government, so register means all the information, age, name, and all these kinds of occupations and so on. All this kind of information must be provided to the governments in order to get registration for those dependents. And later on, then you can get a tax benefits up to 3.6 million per month per dependent. Right? So that's all about tax deductions. All right. So now we move on to number 5, which is tax rates. So anybody has any question until now? Learning outcome 1, 2, 3, 4.
I have a question.
Yep.
Regarding the days for you to be considered as the tax residencies, do we need to stay a consecutive 182 days in Vietnam, or we just need to take the sum of days we stay in Vietnam?
Okay. At the end of the year, we will calculate how many days you stay in Vietnam. So you can in, out, anytime. So you don't have to continuously or non-stop staying 182 days. No, it's not necessary. Out of 365 days, if you stay 182 days in Vietnam, you will be treated as a tax resident. So you stay 1 month and then you leave, come back, leave, come back. There is no any problem. All right. As long as it counts 182 days, that's it. Okay. Any other question? Anybody has any question regarding first, which is tax residence, second, taxable income, third, foreign tax credit, and fourth is a tax deduction? No questions, so we move on. Say something. Any question, or we move on?
I think we should move on.
Okay. So number 5, sorry. Number 5 is tax rates. Okay. So in these tax rates, we have 3 categories for these tax rates. One category is for residents, and in this residence we have 2 parts: residents with employment income, residents with non-employment income, right? So let's see. So residents and non-residents. Okay, so these tax rates are divided into 2 parts. One tax rates for residents, for residents, and another one for non-residents. These residents, they divided into another 2 parts. A and B. And 1, 2. So A divided into 2 parts. One is tax rates for employment income, right? Tax rate for employment income, and tax rates for non-employment income, right? Tax rates for employment income and non-employment income. So let's start with the tax rates for employment income, right? So we have annual taxable income, right? Then we have monthly taxable income. So simply, whatever income is here, we convert it into month. So it's easy to understand, right? And third one is a tax rate. All right? Tax rate. So annual income. So annual income, we have 7 categories, right? And each categories have a specific tax rates. So remember, all these are in million written down. Right? So let's say 0 to 60, 60 to 120, 120 to 216, 216 to 384, 384, and to 4 to 1 to 4 4 to 64 and 64 to 960, and here is 960 above. So the above 960, the last one. 0 to 5, 5 to 10, and 80 above. Anything is above 80. Right? So this 35% tax for any kinds of income above 960, any kinds of income above 80. So 35% tax we have to pay. So here is so that's the minimum threshold for the slab system. So as per their categories, the particular tax rates we have to pay. So again, it depends in particular kinds of income we have to pay. But don't forget that we are not just simply paying that kind of tax. At the end of the year, we're gonna claim some money back, because we have to subtract any kinds of income which is non-taxables, or any kinds of deductions, or any kinds of allowances. So that's the thing, right? And next one is non-residence, right? Sorry, residence, but non-taxable, non-employments or other income besides employments. So we have types of income here. Types of income, and then we will have tax rates. So first one is a business income. Business income. So we're gonna pay 0.5% to 1%. Right? So business income, also known as self-employment income. Right? Next one is a interest or dividend. Income from interest and dividend is a 5%. Any kinds of shares selling, sales share, it's a 0.1%. Right? Capital assignments. Capital assignment is a 20% on gain. So remember, what's the difference between selling share and capital assignments? In selling share here, we are paying 0.1% on net proceeds, sales, or whatever is the selling value of that particular share or total share. So let's say 1,000 shares selling at $10, so $10,000 is a sales value, right? 0.1% we have to pay on the selling. Capital assignments involve gain, whatever profit we are making. So in order to subtract the profit, purchase plus any kinds of additional expenses, and then minus selling price. So whatever is left, that's called as the gain. So we are paying 20% gain, which is involved to capital assignment, right? Next one is a sale of real estates, any kinds of sale of real estates, right? So which is 2%. Remember, it's a sale of real estates, but if you talk about the profit, we're gonna pay 20%. Capital assignments involve any kinds of profit we are making, right? So it's a 0.1% on sales value, and same 2% on the sales value. All right. Next one is a income from copyrights. Income from copyright. So I simply write C. All right. Income from copyrights is a 5%. All right. Income from copyrights and franchisee. Income from copyrights and franchisee, it's 5%, right? Income from any kinds of winning prize, right? Any kinds of winning prize or lottery and stuff, we're gonna pay 10%, right? And any other kinds of income from a gift, right? It's also 10%, right? So so income for prize and gifts, we are paying the same rate, 10%, right? And income from copyrights, franchisee, and interest, we are paying 5%, right? Or any other kinds of capital gain, right? Capital gain, right? Capital gain, we are paying a 20% tax on capital gain, and 0.1% on selling shares, and 2% on sale of real estates. So these are the tax rates for non-employment income for residents, right? Next is a non-residence. Any kinds of person who is living, let's say, less than 182 days and generate some kinds of income, maybe employment income or non-employment income. So they have one list. In the list, they mention employments is this and non-employments is this. And you know that. So the tax rates for non-residents for employment income is a simply 20% flat rate, as I mentioned in the beginning. All right. So employment income, flat rate, 20%. All right. So non-employment. So let's move on to non-residents. Right? So non-residents. Right? So non-residents, we also have, we can divide it as a employment income and non-employments or other. Non-employments. So for employments, we have a flat rate, which is 20%. It's a flat rate, right? No matter what is the income, so we'll pay 20%. Okay, now non-employments. Non-employments, we have, so here is a type of income. All right. And here we have tax rate. So first of all is the business income. All right. Business income 1% to 5%. Right. 1% to 5%. 1% to 5%. Next is interest or dividend is 5%. Sale of share selling is 0.1, same like as residence. Right. And capital assignments 20%. The tax rates are similar except business income. Okay. Now sale of real estates 2%, right? And any kinds of income franchises, income from franchises and copyrights. So any kinds of franchises and copyrights is 5%, right? And any kinds of gift and stuff, winning prize 10%. Right? So I think this is quite similar. Income from prize and gift 10%, income from franchises 5%, sale of real estate 2%, capital assignments 20%. Let me check with the capital assignments. I'm sure. Okay, so tell me what's your question. I go back to the previous one, right? This one?
Yes.
Okay.
So I can take a photo.
Yes,
thank you, Stephen.
So you can see that the tax rates for residents and non-residents are similar, except employments, except business income, I guess. Let me check. Yes, except business income, all are same as residents. All tax rates are similar, except business income. Sell shares 0.1, capital, yes, capital assignments 20% for residents and 20% for non-residents as well. Sale of real estates 2%, franchises and copyrights 5%, gift and prices, income from gift and prices 10%. Yes, so it's same, right? It's nearly same except business income. So non-residents, they have to pay high business related tax. All right, so that's all about your tax rates related to residents and non-residents. So number 5 is finished. Now move on to the last learning outcome. So topic 5. Learning outcome 6. So this is administration. Okay. So in this administration, we're gonna focus on two things. One is a tax code, right? And second one is a tax declaration and payments. Tax declaration and payments. Now, tax code. What is tax code? Tax code, of course, we also call it tax file number, right? We also call it's a tax file number. So which means government or tax department recognize you by a number, right? So every person, whoever apply for tax codes or who is liable to pay tax, government assign them a specific number. So that number called as tax codes, right? So it's really important. In Vietnam, every individual who is involved in any kinds of income, employment or non-employment income, must apply for tax codes, right? For example, if you meet the criteria of tax residence, but you do not apply for tax code, so in this situation, you are liable to pay 20% tax, right? I repeat again. So even you are tax resident because you meet the criteria, tax residents. But if you don't have tax code, then you subject to pay 20% tax. So these rates will not apply to you, all right? These rates will not apply to you even though you are a resident, all right? You meet the criteria, which is 182 days. But if you don't have tax codes, then you have to pay 20% tax, right? So the idea is, idea is once you meet the criteria for tax residence, so make sure you fill a form and submit that form to the local tax office. So in Ho Chi Minh City, there are various tax offices, depends upon district by district, like some is in District 1 and I guess in Thao Dinh and so on. So you fill a registration form and you require whatever documents and you submit, and it takes like around 10 days to issue you tax codes, right? So once you got the tax codes, so which means that table which is 5, 10, 20, 30, and 35, that's tax rate will implement on your income, right? No matter you are a foreigner or local. Once a time you got tax code, obviously you are a tax resident, right? But if you do not, then you have to pay 20% tax, all right? And that's the importance of the tax code. So with the help of tax codes, government can track the people, all right? So for example, if I don't have a tax codes, so when I apply for any kinds of job in Vietnam, and then my employer will ask me, my boss or my company will ask me that, can we have a tax codes? And I said, sorry, I don't have tax code. So in this situation, my employer will charge 20% of my income as a personal income tax, and they will submit this 20% tax to the government. So this is the procedure of paying the tax. So every month, employees, they're gonna receive income after paying tax. So this is called net income, right? So remember, gross income, So we have a gross income, right, and a net income. Gross income is any kinds of income on which we have to pay tax, right? And net income, any kinds of income which is after tax, all right? So it depends. You have a tax codes or you don't have tax codes. If you have tax codes, then you will pay maybe 10, 20, let's say 10%, right? 10%. If you don't have tax codes, then you will pay 20%. And after that, whatever money you got it, that's net income, right? So tax code is important. So before we move on to tax declaration and payments, I'm going to explain you the procedure of the tax and everything. So let's say here is an individual, right? That individual has an employment income. That individual, let's say, is paying 15% tax, all right? And this tax goes to company because company take a tax, all right? Employer, right? That 15%. And this employer will pay tax to government, right? So I'm talking about monthly, right? Paying every month. Every month you pay tax to your employer, and employer will pay tax to the government, right? Now, at the end of the year, of course, you're paying every month, all right? So let's say 12 months. So now at the end of the year, what government will do, government will compare two kinds of tax liability. One is that your employer paid month by month, so which means employer paid for 12 months. And second one is a government will calculate by itself, all right? And then we will see, all right? And then we will see. If you paid, let's say, $5,000 tax, and as per government estimation, so it could be done via tax file. So it's tax return. If it's above or less, so let's say as per filing a tax returns, if this is 4,000 and you paid 5,000, that means you have a 1,000 tax refund, all right? Tax refunds, because when we are applying for tax, when we are filing a tax returns, we gonna consider every kinds of benefits we have. Tax, non-taxable, deduction, allowances, exemptions, everything we gonna consider, right? So most of employees at the end of the year, they file a tax return. They fill the forms, they attach all the required evidences and documents that require to get some claim back from the government. They fill that form, they attach all the necessary documents, and they submit to the governments, right? So means now government will evaluate. Whatever documents you have submitted, government will evaluate, government will calculate here, right? After government calculation, government came to know your actual tax liability is 4,000. And how much you already paid? 5,000. So government will return you 1,000, right? after estimation everything, let's say if it's above 5,000, so let's say it's a 7,000, government estimates 7,000, so you have to pay 2,000 more. You have to pay 2,000 more, and the payments to pay this 2,000 is a maximum 90 days after declarations. Once it has been declared by the governments that your actual tax obligation is 2,000, means you have to make a payments for 2,000 more, then you have a 90 days to make a payment. So that's the meaning of declarations and payments, right? For month, it's 20th of next month, all right? So mainly this is the responsibilities of employer, because employers, they cut the tax from employee salaries and return that net income back to the employee. And now employer has a 20 days to make a payments for the tax to the government. All right, so this is 20th of next month for monthly payments, right? But if you have any kinds of additional or any kinds of tax obligation at the end of the year, then it will be 90 days. So within 3 months, you have to make a payments for your tax obligations, whatever tax liabilities you have. Right. So this is all the kinds of procedures we have, right? So the conclusion is, when we pay tax, there are 4 parties involved, right? Making a tax payments, personal income tax, 4 parties involved. One is a taxpayer, right? Second one is a employer, which is company where I work for. I'm talking about employment point of view. Then here is a tax practitioner, and here is the government, right? So taxpayer pay tax to employer because employer cut tax, and employer pay tax to governments. All right, so this one, it's as per the tax. Now at the end of the year, now taxpayer need to file a tax return. So this taxpayer, maybe that taxpayer doesn't have knowledge about tax. Maybe he or she is not accountant, because everybody's not accountant. Everybody's not lawyer, doctor, engineers, other professionals. They need to file a tax returns because they believe they're gonna get some kind of tax return back from the government, tax refund back from the governments, because they're receiving a different kind of benefits and so on, right? So these taxpayers will contact to the tax practitioner. Now, who are the tax practitioner? Tax practitioner are the people who file a tax return on behalf of taxpayer. So these tax practitioner, mainly professionals, like as could be accountant and lawyer, right? Accounting firms or accountant and lawyer. So these are the mainly tax practitioners. So they are professional people. They have a knowledge about tax. So these tax practitioner, on behalf of taxpayer, they will file a tax return. They will file a tax return to government on behalf of taxpayers. So now government, what government going to do? Government going to compare the tax government received from employer and government received from tax practitioner as a document. So government going to compare, right? So some money government received from here and some information government received from here. So government going to compare, and after compare, and taxpayer came to know whether taxpayer has any kinds of tax refund or tax obligations or tax payable. Right. So this is the ideas for the tax payment system in Vietnam. Right? So we have 4 pillars. 1, 2, 3, 4. All right, 4 pillar. If you are not if you don't have employment income, you have non-employment income, then you have only 3 parties. Right? So you have taxpayers, you have a tax practitioners, and you have a government. All right, there's 3 parties, and with the help of tax practitioner, you make a payments for tax to the government. All right, so that's the, or you will apply for tax return. It depends. So we have 2 categories. We have 2 categories here. One for non-employment income, right? One has a employment income. That's employment and that's non-employment. So this is mainly the procedure for making a tax, no matter it's Vietnam or is other countries. This is very basic way to make a payments for tax, right? So that's all about your topic 5. Topic 5 is, okay, so that's all about your topic 5. So topic 5 is finished, right? So now it's time for question and answers regarding your topic 5. So if you have any questions, so please ask me. Anybody has any question regarding topic 5? So there is no more recording session for topic 5. So no more session for this week, no any Q&A session or any other sessions for this week related to topic 5. So please ask me question.
Teacher, the tax rate of employment income, I don't, in a post, I don't see the tax rate.
Above you.
35% or
Okay, yeah, okay. So
3.5%.
let me write for you again.
I can see clearly about that.
Okay, so I can write again. So you didn't see above, right?
Yes, above.
So, or I write the whole again. 0, 60, 61, 20, 22, 16, 216, 384, 384, 2, 624, 624, 2, 962. And above 960. So this is for yearly, and monthly is 05, 510. So here is above 960 or above 80 is 35%.
Yes. Okay, thank teacher.
So anybody has any question regarding topic 5?
Yes, I have a question.
Yeah.
Is it the requirement of 182 days is a one time only, or it must be recalculated every year?
Every year. Because as I mentioned about tax year is for 12 months, all right? So every time government will calculate in these 12 months how many days you stay in Vietnam or out of Vietnam. Or like if I give you my example. So at the end of the year, when I submit a tax file, so I have to prove the government that I am staying in Vietnam 182 days. So I am paying tax as per 5, 10, 15, 20, 25, 30, or 35. I'm not just paying flat 20%. So what I have to do, I have to submit my passport copy evidence. So I'm printing my passport. If I'm traveling a foreign country, I have to mention to governments that uh, this time to this time I stay outside Vietnam. Let's say for the month of January and February. So 2 months, 60 days, I stay outside Vietnam. All right, so still 305 days I stay in Vietnam. So still I meet the criteria for 182 days. All right. Yes, government calculate every year because even though you are not just foreigners, you are a Vietnamese, and many Vietnamese, they have a dual nationalities or they travel outside from some business or some other reasons. All right. So no matter you are a Vietnamese or non-Vietnamese, you have to meet the criteria for 182 days. If you're traveling a lot, going in and out too much from Vietnam, then you have to declare to governments by showing your passports that here is the evidence that I travel and I stay outside Vietnam for that period.
Thank you.
Yeah.
Teacher, so if we are tourism and we stay at home of grandfather or in a yeah in another country, so we have to pay resident tax or no?
Okay. It's a good question. So he asked me that if you are involved in a tour and travel, all right? You know that you are in a tour and travel, but that company is a Vietnamese company, all right? You employed by the Vietnamese company, all right? So I don't think so. Even though you are in tour and travel business, you in and out sufficient time that will be equals to 182 days. All right. So of course you are in a tour and travel business, but government, you're working for Vietnamese company. So whatever incomes you are generating income in Vietnam Dong by Vietnamese company. All right. So you are more likely to pay tax as per the Vietnam law. You will not be treated as a non-tax residents. You will be, of course, treated as a tax residents because remember what is the criteria? One criteria is the 182 days, and second criteria is you are a Vietnamese. You are a local, right? This is your permanent dwelling. What is the meaning of permanent residence? Permanent residence means Vietnam is your permanent house, permanent stay. It is a country where you stay permanently. All right. So even though you work for tour and travel company, but with your permanent dwelling is in Vietnam, your permanent residency is in Vietnam. All right. So then you have to pay. You will be treated as a tax residence.
Yes.
Right. Okay. Any other question? Any other question? So no question?
Teacher,
Yeah.
in final exam, we have an interview form.
Yes, yes. You have interview
So,
final exam. Yeah. Did you receive assignments for your midterm as a midterm? Did you receive from Mr. Tam? Have you received assignments?
No, we haven't, but he told us that today he will send the midterm exam for us.
Okay, okay. Oh, I mean, oh, so sorry, you have midterm exam or assignments? Assignment, right?
assignment.
Assignments, okay. So you will receive, you're supposed to receive today, right? You will receive today, right?
Yes.
Yeah, so in your final exams, you're gonna have an interview, and that interview lasts for 10 minutes, 5 to 10 minutes per, it's gonna be around 10 minutes one student. So don't worry too much about your interviews, because in our last session, last lecture, I will give you information about your interviews, which is treated as your final exams. All right. So I will give you all information, how many questions and what type of question I can ask you, and all this kind of information. All right. Yes. So do you have any information regarding your school, your university? Class is gonna be open, or no? Any information?
18.
Classes will be open from 18th.
Yeah, we are returning to the university on May the 18th.
18. So from 18, you will study classes, I mean, on-campus classes, no more online, right? No more online?
Yes.
Okay. Okay. All right. So, so what until now? What have you finished with your tutorials? In your tutorials with your tutor?
We did some review. I mean, review about 3 topics: import, export, excise tax, and VAT. And we also did some calculations on this topic.
Okay. All right. Okay. So, any question? Anybody has any question?
No.
No question. So we stop here.
Okay.
Okay. So I will upload this session on internet, and I will send you link later. Right.
Okay. Thank you.
Okay. So still we will study next week online as well, right? Because next week is not 18th, right?
Yes.
Yeah, so we will study next week, which is 13th of May. So we will study 13th of May, and then maybe I'll see you on 20th May, right? Yes. 20th May will be your Wednesday. So your class begin from 18th to 20th. Yeah. So
Yes.
I'll see you next week, right?
Okay. Thank you.
Okay. Please send me email if you have any question, right? I'll see you. Thank you.